Hello, everybody. I hope you're having a good Monday here as we start the month of February already. It's crazy. My name is Dylan Malberg, in for Joe Lucey here on today's Market Huddle. Today, we are lucky enough to be joined by Tom Siomades, who's the Chief Investment Officer at Advisors Excel Wealth Management, is a partner of ours that I'm sure clients that we have here have heard of. So just click through. Here's the obligatory compliance slide that we have to show. So anyway, Tom, I guess the kind of what we wanted to go through on the presentation today, I guess first let's start a little background from you, and then really what are you guys seeing here around the markets, the economy, the overall outlook here over probably the next 3 to 6 months and maybe even the rest of the year here for 2021.
Yeah, great. Thanks, Dylan. I appreciate it. Hi, everybody. Happy Monday. I don't know about the rest of you guys, but I'm ready for 2021 to be over at this point. It seems like the month of January, well, actually the past few days have been exhausting period with all of this Robin Hood and GameStop and all this stuff. But a little bit about my background, not to spend a whole lot of time on it. I was actually doing a presentation last week and I had my picture up, which was kind of, sobering. So I appreciate, Dylan, you not having a mug of me up there that everyone has to stare at. But, I graduated from the military academy, spent some time as an infantry officer, learned a lot, learned I didn't like to jump out of airplanes and, keep my knees at the same time. So, I enjoyed it while I was young. It was a good formative experience for me. But for the past 30 years or so, I've been everything from a portfolio manager to a trader to building mutual fund product, to doing client relations. So anything and everything there is to do on the investment side of things, I've done. Well, the great thing about AWM for me, or Advisors Excel Wealth Management, is that I get to do a little bit of all that. I get to talk to clients like yourselves. I get to develop product. I get to manage portfolios. So and do research. So to me, I thought I'd have to go to Boston or New York to get that kind of experience, but I found it right here in Topeka. Love it out here. Love the Midwest. I grew up in New York City where we had a tree every 10 feet in the sidewalk. So it's good to be out and see some nature. My family loves it out here, and we're extremely happy to be in the Midwest. So without beating a dead horse, let's jump into kind of the next couple of months. So what was interesting is after we had all the shenanigans in January with the transition, or orderly or not, whatever, we've got a new president. Whatever your feelings are about that, it's at this point it's moot, right? We have to deal with what we've got until the next election cycle, and then people can decide which direction they want to head into. That said, the same problems that we had leading into the election are still with us today. And what's interesting about them is how this new administration is going to deal with them, right? So to recap, in case somebody just fell asleep in 2019 and is waking up today, we've had this pandemic with us for getting close to a year now. Okay, so it was bad last year. It's still bad at this point, by every measure that I can see. The good thing is we do have vaccines. Now that's been an interesting process, right? So we had a vaccine. A lot of what the prior administration had done was say, listen, we're going to get you this vaccine at the state level, and you guys need to develop plans to how you're going to deal with this, right? And how you're going to distribute it. Some states had really good plans from what I could see, places like Florida. Some states not so much. And you look at a place like California, for example, that is not doing a very good job, or New York. So, at heart, I'm a federalist. I believe, at the end of the day that, the federal government needs to do some things, but then at the same time, states have responsibilities to their citizens as well. It blows me away that we had a year of this, wringing our hands, and masks and no masks and openings and unlimited openings and this and that. And some of these governors did not do the work of planning for what it would be like to get the vaccine. It's like the vaccine arrived and like, oh, wow, what do we do now? It's like you had 6 months, 9 months. Get a committee, lock them in a room, socially separated or whatever. Keep them separated, but lock them in a room and have them come up with a plan. So then when you get a vaccine, whether you believe Trump or not, you got a vaccine in November. So roll the damn thing out. And I think that's a huge overhang right now, from a standpoint of what it's going to take to get us back to normal, because it appears exceedingly that more and more, the vaccine is going to be the answer to getting us open normally. Now, granted, we're at the height of the cold and flu season right now, and the challenge is that people are more apt to get sick during these winter months. So we're really not going to see an improvement, vaccine or not, in these levels of infections until probably about March or April, when the winter's over. So, but for you guys in Minnesota, that's probably going to be like in July. That's when your winter's over. But that said, that's the big thing. How are we going to stick needles in people's arms and get people vaccinated so they can go, get on with some semblance of normal life? So you have that going on. We had a huge GDP print in the third quarter, but then last week we had the fourth quarter, and there was a dramatic decline. And a lot of that has to do with this sort of lingering fallout from all of these on again, off again lockdown orders. Some states, like I said, are doing great, and others not so much. I mean, you look at some of the drama that's come out of California. The governor's up for recall, and they're still not allowing people to even eat outside. I mean, it's loosening up, but not quickly enough. Ironically, the stock market hasn't really paid a whole lot of attention. We had a great January, and despite the shenanigans of the past couple of days or so, with all of this shorting and speculation in some of these obtuse stocks, the market seems to believe that we're going to turn a corner here at the beginning of the first half of the year anyway, and do better. Now, we saw 31,000 on the Dow. We saw records all over the place. It's sort of contradictory when you look at what we're seeing in our everyday lives, and why is the stock market doing so well? But, again, the stock market's a forward-looking mechanism. It's by and large mostly optimistic. So the assumption is once we get these needles in people's arms, give them the vaccine, we get through this winter, and things start to resemble normal again. I think that's what the market is looking towards. It's going to be hard to determine what the second half of the year is. Again, a lot of this is we have this new administration that's taken a very different approach than the prior administration. I saw somewhere that there was in the magnitude of over 40 executive orders that are mostly aimed at undoing a lot of what happened and what the Trump administration had done. So it's going to be interesting to see if that's the process by which government will function from here on out, because we still remain deeply divided, regardless of how you feel about the election. One way or another, there's half of this country didn't like the outcome, is distrustful of how the outcome turned out, and then there's another part of the country that doesn't really want to unite. So you've got a president who says out of one side of his mouth that he wants to unite and he wants to bring us together, but by the other side, he's not including the opposition in the formulation of policy. We've already seen, and I don't know, Dylan, does the XL pipeline go through Minnesota or does it go through North Dakota?
Mostly North Dakota, I believe, but I'm not a pipeline expert myself.
Yeah, so we've seen kind of a very blatant example of kind of the priorities. They shut down the pipeline. That's going to cost about 11,000 jobs. We did a great job the past 4 years becoming energy independent. The Green New Deal people want to eliminate fossil fuels, and this was sort of an appeasement of that. But my concern is that as we go forward, more and more of these policies will be anti-business, more onerous with respect to regulation, and we may have a good first half to 2021 because these policies haven't been fully implemented. But it's kind of like, an engine will run if you keep throwing sand in it for only so long, until eventually just grinds to a halt. And that's my biggest concern, Dylan, and for the next, 3 to 6 months out. I mean, we're in a great place with markets right now. It seems like they're optimistic, but my concern is down the road, as we start getting some of these more counter business type policies, it may grind things to a bit of a halt. And the whole executive order path, it's not been a great one. I mean, when you think about when Obama was doing them, he was getting challenged in court all the time. Trump tried it, especially with the whole the Muslim travel ban and all that. That was one of the more famous ones. And now Biden got thrown into court, I guess, for trying to stop the deportations. So they're always susceptible to just one judge lifting a pen and saying, okay, we're not doing this until it gets heard in court. So that's a very dangerous, sort of very narrow approach to policy. But it seems to me a lot of the policy is being skewed more toward anti-business than it is pro, like we had before.
Mm-hmm. Yeah, with I know a lot of talks and questions we get about the direction of tax rates, and it looks like with the administration, I guess they're more. Their number one goal is obviously the vaccine rollout and where that's at. But I guess what do you see on a timeline for any significant changes around tax policy and even maybe more strict regulation?
Yeah. So what I'll say as far as tax policy and additional sort of measures that I do anticipate those are coming. Those are just not front burner for the constituency that got Biden elected, right? So their first priority seems to be focusing on the Green New Deal type things and climate change, immigration policies, some of the more social justice type programs. Those seem to be sort of top of mind right now, and again, they seem very, with the exception of an attack on petroleum-based industry, those seem pretty nebulous. Like I don't, you define for me, what social justice is and what that means. You can talk about it all day long, but I don't know what that means until I see how it's going to affect all of us on an everyday basis. So that said, once we move past sort of that initial round, that first wave, those type of things, the focus still is and was and should be on the vaccine. So they could do all those things without any kind of involvement from anybody and just kind of push them out via executive order. But the vaccine part is you're going to need everybody, to do the lifting here, right? So those things are, that needs to dominate what we're doing in order to get us all back on track. And then, you still have half the states that voted for Trump. So that, you still have more than half the states that have Republican governors. You need to get these folks included and united to fight this virus. Now, once we get past that, and I think, again, talking about early spring, probably the April, May timeframe, when we start seeing a decrease in cases, more immunizations, people are going to start, getting back to some semblance of normal. What's going to be interesting is I used to think that Republicans were fiscally conservative and Democrats were, spendthrifts. I don't know that that's applicable anymore. We've got so much debt that the only real way you're going to find a way to tame it is not through spending, because that's just going to involve more debt. You need growth. And then unfortunately, with that growth, you're probably going to need taxes too. There was a time where you could offset bad fiscal policy by growth. But if we have an environment where businesses are hampered or businesses are overly regulated and they have to devote more and more resources to dealing with that, that's going to hamper growth, right? So then you have to go back and say to yourself, where are you going to, get the rest of the funding you need? You got some from growth, you're going to have to hit taxes. And I think, if you look at what their platform was that, there corporate taxes were going to go up. The individual tax rate is going to go up. I don't buy that whole 400,000 and above. I think everyone's going to get whacked eventually. And if folks don't know it, when you look at the fact that I believe it was $137,000 a year if you earned that last year. you had to pay FICA. Well,
Mhm.
that's one of the most hidden tax increases that's out there, because every year it goes up by like $5,000. And anytime you make any amount over that, you don't have to pay Social Security taxes, right? But eventually that's just going to go away, and everybody earning any amount of money is going to be. So to me, that's taxes. I mean, if it's a different, if you get out from under that, say you're paying $500 a paycheck, and you get out from under that after say 6 months, that basically means that you're going to be paying, $1,000 a month for another 6 months, because now you didn't get out from the income tax, or the retirement portion of Social Security, right? So that's a $6,000, in my view, that's a $6,000 tax hike. And taxes, trust me, Dylan, they come from everywhere. It's not just your income tax rate. They'll raise real estate taxes, or they'll raise, your school district taxes. But at the end of the day, I got to figure it's coming, because they can't make it up with growth.
And do you see, I know you kind of talked about it a little bit, do you see kind of the days of, with all the regulation, kind of go back to the Obama administration, where it's just kind of that slow growth kind of back upwards? Or do you see with innovation, maybe around technology or something else, that might be able to make up for the increase in regulations?
There's always that possibility, but I have to look at the Obama model, right? Because that a lot of the people that the Biden administration has initially attracted back into the fold are all old Obama appointees. They kind of been sitting on the bench for 4 years, and they are getting asked to play again. And I doubt that that old dogs learn new tricks at this point. I think they're going to go back to the things that they thought worked, and we're going to get back to the point of 1 to 2% annual GDP growth rate, and that's not healthy for the country going forward.
Mm-hmm. If anyone on the call today has any questions or wants to book a quick call with an advisor here at Secure Retirements, I'll throw this up on the screen here. If anyone has any questions as well, if you want to throw in the chat bar. So I know, again, only looking 3 to 6 months out here. It seems like everything with the vaccine and the way it's rolling out, it could be faster and more efficient, but it seems like it's going to get out there at some point here in the next, again, 3 to 6 months for the most part. I guess what's significant, maybe hangups, because you envision happening as far as, there's a new, I think it's the Johnson that just came out as far as another vaccine. Kind of how do you see what negatives could come out of everything too that could substantially shake the markets?
Yeah, I mean, from a negative standpoint, I mean, there's always obviously a geopolitical event. You don't know how this new administration is going to deal with a foreign crisis. We've been sort of spoiled the past 4 years, and that we haven't had a whole lot of overseas conflict to deal with. As I mentioned earlier, we're talking about some of the folks that have come over from the Obama administration. They didn't have and I'm specifically thinking about the new Secretary of State, didn't really have a severe issue with implementing regime change or getting us involved overseas. So there's always that possibility. Another thing to be mindful of is as we go forward with some of these policies, especially attacking the energy sector, you can see a spike in fuel prices, right? And fuel prices are interesting because there's one of the it's no joke when they say oil is the lifeblood of the economy. It literally is. It impacts everything from shipping to manufacturing to people getting back and forth to work every day. All those type of things. If you're attacking that source, I think over the weekend or last week, the Biden administration followed up on claiming they're going to ban fracking on all federal lands, which, it's interesting. When you say that, and then they say, well, it's only federal lands, but 95% of fracking occurs on federal lands, right? So, you start drying up those sources of oil, it makes us, one, makes prices more expensive here, makes it harder for people to do business and get around. But it also makes us dependent on foreign sources and drags us into an environment where we have to deal with these people more, and then there's conflict there, right? So those are the kind of things that I can see, sort of derailing us. And then obviously, it's the pace of recovery. Putting vaccines in people's arms is one thing. I don't know how likely, like, we were just talking about before we started about, they're saying in New York City they're going to go to 25% occupancy of indoor dining. I don't know business in New York City that can survive a 25% occupancy unless it raises its rates that it charges for food by 300, 400%. So, that's a problem, right? So the other thing to be mindful of is, frankly, is inflation, right? And cost of goods. Is we have to be careful here with all this money flying around and all this money being spent. Is that going to have an impact on, the price, the cost of goods? I've already seen, forgetting the toilet paper shortage, but, there are things that are just not as abundant as they were before. So inflation's a concern as well. I don't know about the next 6 months, but probably in the next year or two.
Mm-hmm. And you kind of hit on this. There's a couple of questions out there. With the attack on fossil fuels, do you see oil production falling and then the price rising?
So obviously, I'll see price rising. The issue that I view is that I don't know that they're going to stop they'd obviously like to make more as the price goes up. Who doesn't, right? You want to sell more product. The challenge is going to be are they able to, right? So the price is going to go up because I think, either the supply is going to get capped or it's going to decrease because of regulations. So as a result of that, your oil prices are going to go up. I mean, we're at $50 now. I don't think we're going to go to $100, but you could see it sort of slowly eking up usage is gonna go up as proportionally with the markets and economies opening more fully, right? So I don't see it going down from here. I see the price going up, but I see capacity being constrained artificially, is the best way I could put it.
Okay. David, to your question here, if you should cash out of your IRA, is it too late? That's something I would schedule a call with us. And there's tax implications. There's investment conversation that happens there. Probably something that's more of a personal conversation to book with us. But I don't see any other questions here. Tom, do you have any closing thoughts here?
No, other than hey, I wish it was a more cheerful conversation, but there's just what's important in my view now is this is the time where your planning gets tested, right? This is why all of you work with an advisor, is because you value planning and their expertise. I'm not going to lie to you. It's not a very easy as it goes time right now. Who knows what the next 3 to 6 months bring, but it's not a time for panic either, because if you have a plan, you should stick with it and implement it. I mean, hopefully if you have money set aside for the next 3 to 6 months, you've worked with your advisor for that. And then, from 6 months or a year on out, you have a plan for that as well, because these markets, stubbornly, as we may try, we can never outsmart them. They're up 4 out of every 5 years or so on average. You're almost always, going to end up ahead. The train just keeps moving. The question is the choices you have is, when do you get off the train? When do you end your journey? The journey, again, we've seen the charts, right, Dylan, where if you invested in 1920, it was down here. And I mean, no one's around that did that. But at the same time, though, it still shows you that the market bias is always upward. So if you have a plan that meets with your risk tolerances and you're comfortable with it, if you see a little bit of, choppiness, like we saw the past couple of days, it's not a time to panic. At the end of the day, I think you'll always do better. It's just a question of making sure that you do better while you stick to a plan and you're comfortable, right? So doing better but pulling your hair out is not a recipe for good mental health and stability. So again, the biggest thing I would say to folks is just double check your plans. Make sure you're good with your plans. Talk to people. I think in that scenario, you should always be, well served going forward. And hopefully the next time, Dylan, we get together, it's a more cheerful conversation. But it's there's just so many unknowns in the next 3 to 6 months. But I think we'll be okay with markets through the first quarter, and we'll have to just see how things play out.
Oh, absolutely. Thanks a lot for joining, Tom. Again, we have the link up here to schedule a call if there's any questions that anyone has. There was a couple up there, but we're kind of bumping up on time here. So thanks for joining us today, Tom. Again, thank you for your input here today on the call. I hope everyone has a great rest of the week.
Thank you. Be safe. Take care.
You too.
Bye-bye.